Welcome back to Rockstock Channel. It is Friday, September 29th, and a very rainy New York week. But we're going to do another recap. We missed last week. I think we may do these bi-weekly and not weekly. I don't know. It's the end of the quarter, so we have the scoreboard here. We're going to flash up. Q3 was not great in lithium. We're going to talk about that a bit. And on a year-to-date basis, also not so great with, if you just look at some of the majors like Albamarle, SQM, Ganfeng, Tangxi, all down 20 to 45%, kind of year-to-date. I'm the lithium ion bull. We are in a bit of a bearish market here, and question we're going to discuss here very much is, are we at the bottom? There's some mixed opinion here. Before we go into this, I just want to remind everybody of all, RK Equity, social media content, etc. If you like this video, please like it, subscribe to Rockstock Channel, comment, hit the notification bell. I want to point you to some recent videos we did with Pilbara's Dale Henderson, some useful information there. And on another side of the spectrum, early stage Champion Electric Metals in James Bay, we interviewed Jonathan Buick. Also reminding you to visit RK Equity's website and register your email so that you can get the Lithium Ion Bull, which we'll publish in a week or two with the scoreboards. And on Twitter, or now X, make sure you follow at Rodney Hooper 13 and me at Lithium Ion Bull, as well as at Lithium Ion Rocks, which is Rockstock Channel's X handle. And finally, we are going to be hosting a Spaces again with Jordan Giesige next week. I think it'll be Thursday of next week. Jordan Giesige runs the very popular The Limiting Factor channel on YouTube and did an unbelievably great piece on lithium in the middle of the summer, which we're going to talk about. But, and finally, just, visit Patreon if you want to further support us, at a $10, $100, or $300 tier. Go to patreon.com/rockstockchannel. Rodney, here we are. Where should we begin? We have a whole bunch of topics to discuss here, but top of my list here is Stellantis was on the tape with a $90 million deal in Argentina with a company that we barely pay attention to, Argentina Lithium. They've previously invested in some DLE stories, I think, in Controlled Thermal and Vulcan. So what do you think Stellantis is doing here compared to, some of their peers like GM and Lithium Americas and Ford and Liontown and Tesla, doing deal with Hard Rock?
Look, Howard, it's, again, it seems lithium outsiders are always doing deals different to what lithium insiders are doing. Lithium insiders are all fighting over Hard Rock assets, a lot of them in Australia, and lithium outsiders are buying unconventional flow sheet exposure. So up to them, it's their choice. But again, in Stellantis, one wonders, and I'll let you have an opinion on this, are they doing deals where the shingle is out for sale and they're not doing deals where there's not for sale? So as far as I know, the asset in Argentina hasn't got a resource. They've done limited drilling, etc. So again, a big bet at a multiple of the valuation. So congrats to the shareholders and the management there. But given the level of development of that asset, it's going to be a long time before you get any meaningful production out of it. I think Stellantis, if ever, is going to get their material in 2030 or beyond. So they are, to my mind, in terms of securing supply, securing it very late, because at the rate of EV penetration and the rate of take-up of EVs, I think they're going to be missing the party by the time they have secured, internal supply, or whatever you want to call it, deal supply. And just as an example of that, EV penetration in China for the first few weeks of September is at 40% already. I don't know when they're going to get their material. They paid over the odds. I still believe that even in Oz, but certainly in Canada with hydropower, etc., you can get much lower CO2 emission material. And I don't know if you noticed the Northvolt deal. They've got some subsidies and so on. They're going to build a 60 gigawatt hour battery plant in Quebec, and there's some cathode linked to it as well. So that end of the equation keeps going, and they believe that they can produce at half the CO2 emissions of Asian battery plants. So I don't know why outsiders keep not going into hard rock, although Rio did the Midland deal and so on, but it seems the OEMs, only some, and Tesla, with looking to secure and do Corpus Christi. So there you have it. In my view, Stellantis is paying certainly what looks to be very full prices, so encouraging for the rest of the industry, but their timelines for getting material from these deals is, in my mind, a long way away.
Yeah, look, Rio bought Rincon. That's going to be longer dated and more expensive. So Stellantis business development team should be aware of all of these things. It's a big head scratcher. I think it was a $90 million earning deal, but for a very early stage asset, good for them. We're going to talk about the Lithium America's split off, which is happening next week. Which is positive, or this news flow in Argentina is positive for the Lithium Argentina component of that. So why don't we just talk about that now? I did a poll a couple of weeks ago asking my followers, and it was reasonably voted poll, over 450 people, saying, do you intend to own both Lithium Americas, neither, or one or the other? And the vast majority, I think, said they were going to own both. I think that was like maybe 50%. I don't have it directly in front of me, but we'll flash it up here. But the minority was, just owning Argentina alone. That was like 9 or maybe 10%. And we've been wondering, why haven't the investment banks actually come out and articulated what they thought would be like reasonable valuations? Only one, had the cojones to do that. Stifel came out with, basically saying Argentina, they think will be more highly valued than Thacker Pass. The split off is actually going to be a 1-for-1. Implicitly embedded in that is that they think, each company is worth the same. I own no LAC, but I am more intrigued, surprisingly, by the Argentine side. A lot of the, John Leitsis, I know, is the CEO. But even Tom Benson, who I ran into in New York this week, Mr. Volcano, Thacker Pass, he wrote his thesis. He's decided to join, the Argentine side. I just think there's going to be more deal flow and news flow. I think sentiment toward Argentina is quite negative. Sentiment toward China is quite negative. Sentiment toward Ganfeng and the like is quite negative. And so those are contrarian indicators, in my opinion. So a bit LAC Argentina is to some degree a contrarian play, but it does have cash flow. We'll see how it trades, but I'm inclined personally, to look at that. Thacker Pass, I think, is a great asset. I think they'll get the GM investment post split off. They'll likely get the loan from the DOE, but that's a huge project that's going to be under construction for 3-4 years. Yes, there may be a catalyst, on the DOE loan, but I think that might already be part of the expectation and priced in. Who knows? But I'm not confident. Just a deal flow wise, I think they should focus on developing Thacker Pass as the main asset, and the Pierre Lassonde curve and world, right? That's going to be 3-4 years of construction. Anyway, that's my view. We'll flash up, Stifel's note here briefly, but very timely, interesting. And, I think Ganfeng is a great operator, and LAC has a great partnership with Ganfeng. And I think they'll do stuff possibly outside of Argentina, in other places in South America, and possibly elsewhere outside of North America. I don't think they won't go to the US and they won't go to Canada, but I just think, the deal team, LAC has done a lot of good deals over the years, from SQM to Ganfeng to BangCheck to Millennial to Arena, probably missing one or two there. and that deal team is largely with the LAC Argentinos. That's my view on that. And Stellantis investing in Argentina, another reminder. They have an election coming up. From everything that I'm hearing or reading, it's a mess. Fernandez is, the team won't be there, but Argentina is always a mess. And, but, as a lithium supplier, I think you have to risk it accordingly. But, Orocobre has been there for a while, having a successful business. Livent, there for a while. There's some scarcity, value now because Livent and Allchem are merging. If you want an Argentine play, you have like the big cap, merged Livent, Allchem, and then you have LAC, and then maybe Galan, early on. Before we start today's video, we'd like to thank our two sponsors, brine field services company Zelandez and investor Lithium Royalty Corp, listed on the Toronto Stock Exchange, ticker symbol LIRC. We'll share more about these sponsors later in the video. Let's switch quickly. I want to make a comment. Two former RK clients from several years ago were in the news. Bacanora, Ganfeng, it's being nationalized. That thing is not going to get into development anytime soon. But for all the Bacanora shareholders who are complaining a little bit, that the valuation Ganfeng paid a few years ago was too low, I think it was a good time to sell into that, and you at least got that money. And Lithium Power International announced that they're in talks with CATL, the state, copper company, and this is in line with, the new policies in Chile, focused on developing things, through the state. So the stock was up. We'll see what the bid is. I don't think that this is necessarily going to be a competitive auction. I don't know what's going to come in there, but just the Argentina relative to Chile, relative to Mexico, looks relatively okay. But to the extent that supply models had Bacanora in it, if you look at benchmark or fast markets, and they probably considered Bacanora, a highly probable asset. Kunga maybe, in the possible category. These things are probably more further delayed. I don't know. We'll see. But I was with Winsome Resources in New York last week, and there's a meaningful bearishness in New York and relatively more optimistic view in Australia. Just if I could make that dichotomy, what was a takeaway there. We're going to flash up a note of some negativity from out of Evercore, who covers Albamarle, suggesting, the narrative in the market on price is confused. And Rodney, we're going to hear your views on those narratives. But, he's basically still has a buy recommendation on Albamarle, but he doesn't have great faith in his in the medium longer term, pricing in the 30-35. I think his price target's based on 30, LCE. But if you ratchet that down to 25 or to 20, then Albemarle's cash flows will be meaningfully lower, and the debt, and their debt ratios, if they go through with their acquisition of Liontown, will be a lot worse than they articulated just a couple of weeks ago, if that transpires. So Albemarle's near 52-week lows. Let's talk about, Liontown a bit as well, Rodney. The price is no longer above 3. It was at 294. And Hancock is now above, the 10% threshold. Do you think that this deal goes through?
Looking at the percentage holding that she has, and looking at if you want what we would call, where I'm from, scheme of arrangement or what have you, where you need a 75% vote, it looks like, unless the stars absolutely align, that this thing, she can block it if she pitches up, in which case Albemarle's doing the due diligence. I'm sure you've seen the notice about the cost overrun, and I'm sure you've seen that they need now another $450 million for all of the cash flows. So again, whole of all float, underground, so on, costs, and just general inflation going up. So Albemarle is halfway through its due diligence. I think she can block. Would Albemarle up the bid more? Then it's a pity, because I'm a shareholder, and that's going to come off some more if they have to outbid 3. but that won't change. I can't see that Gina's in it for a turnaround, flip. So if she keeps blocking this thing, it's done. In my opinion, that leaves, Hancock with Liontown to run their own show and go it alone, and Albemarle will then have to pivot and have a discussion with Mr. Ellison to start ramping Wodgina quickly for the Meshan plants to get the material up and running, which I'm assuming they were thinking would be Liontown. I don't think it would necessarily be a bad thing for Albemarle if this deal fell over for them. It is a big ticket, and I don't know how quickly, them as an operator is something that is not, it's a slightly different flow sheet. Maybe it's not the end of the world. I would not, as an Albemarle shareholder, be happy if they were to up their bid again. As I say, I don't think it matters. So let's see. And then the question is, what happens to the Liontown share price if Albemarle backs out or blocks? Because I understand Hancock and them aren't talking, so it is hostile. Doesn't sound like there's any sort of arrangement between the two as it stands now. So what is the value of Liontown with what's happened with the overall market? And they need more cash, although they're talking about debt. If Albemarle steps away and the $3 bid's not there, I understand. I think short interest now 5%. I think that may pick up, Howard.
I agree with you. I think Liontown could very well be a short here. We have no relationship, to the company, but just reading the tea leaves now that Hancock has a seemingly blocking minority, it is our understanding that Albemarle and Hancock have not entered any dialogue. This is just intel we've picked up from our chats, this week. Yeah, and short interest is now 5%. The stock is 294. If Albemarle leaves, there's a lot of downside, right, to Liontown's stock price, in my opinion. And there's not much upside above 3, which is a fairly, rich price. And as you rightly said, they have a cost overrun, and they talked in their press release about various kind of conversations they have with a syndicate of lenders and the Australian government. But if you look from a debt perspective, they didn't mention anything about the Ford arrangement in that, but I think that this cost overrun is on top of the $300 million that the Ford was going to commit to them. But when you think about the cost of debt, Mineral Resources just completed a bond deal which was oversubscribed, $1.1 billion, up from an announced $850 million. This is US dollars, and the interest rate I think was like 9.5%. Which compared to a MinRes bond deal a couple of years ago, which was, I think, at 8% or 8.5%. So the fact that it only went up 1% is not terrible, considering how high interest rates have risen. But if MinRes, a very solid company, is getting 9.5% interest, the cost of debt to Liontown will be meaningfully higher than that. And if we go back to the last cycle, when Altura went bankrupt, and Alita went bankrupt and Nemaska went bankrupt, it was because they were forced to take 13, 14, 15%, kind of construction lending, mezzanine. So unless they get significantly subsidized loan from, the Australian government, this is going to be a risky, project, and with high interest debt. I don't know what, like Gina she put out a statement saying that, she has the balance sheet. They have successfully, done a $10 billion, Roy Hill, iron ore business, and offering, that capability. To be honest, Albemarle doesn't have a lot of, they don't have any mining capability. They have the balance sheet to do it, but they were in this for like the downstream. If I'm a betting person, I think ALB walks, to be honest, and that's a risk for Liontown. But then what happens? You have more. If we go to let's bring up and we could talk price a bit now. The lithium carbonate price. There's a Lithium America chart. You were right. We had you and Matt Fernley on, in April, kind of calling the bottom, and when lithium hit around $30, and it spiked. I think it went up to 40, 45, and has quickly come back into a double bottom here. My point on if you look at the historic price chart, when we went up to $85, you had what I had called this spodumene duopoly, right? Albamarle and Minres mothballed Wodgina, and you had Pilbara mothballing Altura. Now you have both of those companies, pedal to the metal, producing, but you had Minres walk from Albemarle and is competing with them because you see all of Minres's activity, in Alita, buying Alita now, in Delta Lithium, in Essentials. Minres is really competing with Albemarle as much as collaborating with them. And now you have another iron ore magnate in Gina Reinhardt, Hancock, very serious, about entering the Western Australia fray here. So it's becoming more of an oligopoly, and with, new production coming on from Sigma and North American Lithium and other players, there's no discipline, right, on the spodumene production side, I think, which is somewhat of a negative omen, right? If you just have, unless the demand continues to be there, and we think it will be there, there is excess capacity of conversion capacity in China. So what is this? So a spike to 80, like we saw, is very unlikely. Again, it was a unique period in time. But what do you think now, Rodney? You've made some comments and tweets about where we are. Is this a double bottom, or do we go further down from here? Are we going to bounce? And is it a sustained bounce, or is it a leveling off? What do you think happens on price?
So you can't, the spodumene, the non-integrated converters don't make money at these prices with where spodumene is at. They need the price of spodumene down in the upper teens, maybe around $1,700-$1,800 a ton. The spodumene producers are trying to sell at $2,600 to $2,800. And lepidolite doesn't make any money when you take an ex-VAT price of around $20,000 a ton now. The marginal lepidolite doesn't make any money. So you can probably find equilibrium on the lepidolite, let's call it $25,000, $30,000 a ton, and then spodumene. My long-term price for hydroxide is $30,000, which equates to about a $2,000 a ton spodumene, allowing for a little bit of margin. So the question now is, where will the discipline be? The talk is that the mid and the downstream has destocked and run it beyond. What we will always have is some lag factor with previously imported spodumene or DSO or lepidolite or whatever it is, that you've got to convert that and then sell that. But, we've seen production from the marginal producers drop off in China, which makes sense because you can't buy and sell at these levels. So now comes the debate. The demand seems to be there. We should see a recovery, but the question is to what? I think we're leveling out at, we've seen increased activity in the futures in China and, the CME. So that will have some smoothing. Obviously, it's not big, but it'll have some impact. So I think we should see less volatility as we go forward. The other nagging concern, and I keep raising this out, is that OEMs outside of BYD and Tesla are not making money selling EVs. They cannot sustain high lithium prices and high battery cell prices. Even when they ramp production, I think it's always going to be tight for them. They're going to have to see volumes. BYD and Tesla have got a great head start. We'll see. I think in the nearer term, the logical move would be up to around 200,000 renminbi, maybe a bit higher. You can, of course, see a spike, but the question always is, how quickly can operators come back online? And China lepidolite, I think, is quicker than somewhere else in the world. So whilst China runs conversion capacity, they will be able to flick the switch back on. We'll have to see, because Chris Ellison is buying everything left, right, and center in Australia, and he doesn't want to use China. He might use tolling. He wants to do midstream, but he's now effectively taken, he's somehow managed to muscle into Delta Lithium with a 17% stake. He's bidding for a liter. It looks like that might go through. You've got Wodgina and you've got Mount Marion. And he has an equity piece of global lithium. So he's got that Kalgoorlie area sewn up, and he's not a big China man. So what we'll see in time to come, whether he'll make that midstream and send it to Europe, that changes things, because how you do pricing and how you do inventory and how you do selling of contracts and CO2 and whatever is going to be different. So we could see a different world, but for now, it's all China on spodumene and DSO and lepidolite imports, obviously the brines and so on. But if you look at the numbers and you look at the import numbers and what have you, my estimate is China will produce and import around 550,000 tons of carbonate this year out of a total market of about, 650, 680. China dominates carbonate, and you can't just ignore it. And there's still lots of people who, you saw in the Macquarie and them quoting SMM how much is in the marginal producers, about 275,000 tons per annum. So a lot of that will be, in my opinion, quite a bit of that will be spot traded. Let's see where we go. But a number of projects, a number of converters and producers can't make a living at these prices. And I do think inventories are running down. So we will see a move. The question is, how high? I don't see it blowing out. If it does, it's for a short period of time. Maybe they've really pushed it too far, and they've let inventories run down too far. As you've got new producers of spodumene come online, they maybe feel they forced sellers, so they might think they can get away with it. But I think up to 200,000 and over, I think at some point in Q4. So we're at, 165, I think now, say 20% or more.
Okay. So this chart that we have here from Lithium Americas would show a double bottom. You think we bounce from here, that chart is going to look more range bound, right? You're not going to have higher highs, and you may not even go as high as we went, in June, but it's possible you could always go a bit lower. In the downturn in 2019, 2020, you had distressed sellers like Altura just had to keep, producing to try to, at any cost. You don't have that kind of distress, and it's still profitable even at, $1,500 spodumene. All the producers of spodumene are still making money.
Yeah, I think the reality though is, Howard, if you look at the read-through of what the implied price of chemicals is using a 1,500 spodumene, and you look at capex costs and feasibility studies that are coming out now and OPEX, there are a lot of ex-China projects that make absolutely no sense if you do the read-through of 1,500 spodumene to chemical prices.
Fair enough. So you believe that... I think Standard Lithium used $30,000 in their recent feasibility study. I think Latin Resources just used $1,600 in their PEA, I think it was, or $1,700 for spodumene. That's not a super high capex project. The IRRs, according to their PEA, very high. It's still plus or minus 35%, still early stage. There. This Macquarie piece, we're going to show up some slides. I thought it just had a lot of useful information. They had a table or a chart here, estimated LCE production costs for Chinese producers. And they showed brine from Shanghai, brine from Tibet, spodumene from Xinjiang, and then lepidolite not integrated, low-grade lepidolite integrated. And they're basically saying that, the high end, as we've always said, is the spodumene non-integrated. They're not making money, as you say, at $21,000 LCE. Low grade lepidolite can make a teeny bit of money there, but I just found that interesting how they broke that down into those categories. And then a number of groups have been quoting SM pricing as you have. Macquarie used it, Cowen used it in their data. And then there was this tweet, which I retweeted, which showed, the price in China versus the prices in South Korea, Japan, and elsewhere were, a huge difference. And another graph, from Macquarie, which shows that, kind of year to date, it says Chinese lithium prices have underperformed. They show the China LCE renminbi price down like 40%, the hydroxide price down a lot. But if you look at the Asia LCE, Asia lithium hydroxide, US, Chile, all those prices were up. Spodumene price was down, only a little bit. And this is like 2022 till now. This table, which referenced, Bloomberg and Macquarie, and then which corresponds or correlates to what SMM is saying. Is there a China discount and a rest of world premium, or is this just a lag effect, for the non-China market?
I think it's a little bit of both, but you've got to understand what a good proxy for what price. So again, as I mentioned, if you look at how much carbonate is produced in China and how much they import, they dominate that market. They are more than 80% of the carbonate market. So look at SQM. In the second quarter, they got an average of $34 a kilo. What are they going to get in Q3? We're about to find that out next month. Might it start with a 2 handle? I don't know, but my guess it's going to be close to 30 or possibly less. July was okay, but I think August and September are weaker. That gives you an indication. The material coming out and the table that you saw and I saw on Twitter and so on is hydroxide. And that will be on different contracts. But, carbonate, the import price and the spot price we can see because we get it from SQM. The vast majority of carbonate imported into China comes from Chile, and it's SQM and Albamarle. So you know those numbers. SQM does a bit to elsewhere. They might be getting a slight premium on that carbonate. So we'll be able to see. So I think there's some lagged effect, but we've been leveling out. So we're going to see very soon where things are at. But we've watched, what's happened with the spodumene price, and you need to keep an eye on that because that lepidolite is a price. It's, especially if it's integrated, what that number is. The non-integrated converter using spodumene, it depends on your input price. And if spodumene produces cave or they sell at lower, then, that chart is a dynamic chart. It changes. I'm very interested to see what SQM comes with. And we shall see from the new producers, from the Sigma, which was 9% of hydroxide. What hydroxide, I don't know. And the Sayona Piedmont, we'll see what they're getting paid.
Yeah, we will find that soon. And jumping in here from the editing room to tell you about our two sponsors, Zelandez and Lithium Royalty Corp. Zelandez provides services in subsurface data visualization, downhole geophysics, and other services for lithium brine operations. They just expanded into North America. And no matter where you sit in the brine industry, Zelandez can help you speed up and improve your projects. Go to Zelandez.com for more. Lithium Royalty Corp is at the center of a global energy transition and manages a globally diversified portfolio of lithium-focused royalties in electrification and decarbonization. With 32 royalties on 29 higher-grade, lower-cost projects from exploration to production, LIRC covers all the bases with well-managed risk, ESG considerations, and a scalable royalty structure. Lithium Royalty Corp is traded on the Toronto Stock Exchange, ticker symbol LIRC. To find out more, visit lithiumroyaltycorp.com. But we are in the kind of what is meant to be we're now in Q4, right? And Q4 and Q1, the seasonality of demand is good, and also the seasonality of supply, like the Shanghai brines, et cetera, in the winter are producing less. The expectation that, we have price rises from here and that hopefully impacts lithium equities. That's what Macquarie is saying. Macquarie is saying we're poised for a bit of an uptick because the market's pricing in 1,500 spodumene and low 20s carbonate. If we get to 2,000 spodumene and 30,000 carbonate, which is like your long-term price, and we like level off there, the projects that you talked about, that are on the drawing board are economic at those prices. And I'm just going to flash up Macquarie, is indicating that, from these levels, Pilbara has 71% upside, Sayona 100% upside, Piedmont 160% upside, Core Lithium 88%, Global Lithium, you mentioned, 68%, Galan 133%, Atlantic 51%, and a few others.
Talking of that is an interesting one, how Stellantis, look at Galan's current valuation and price, that they didn't do a deal there.
Like, why wouldn't they buy Galan instead of Argentine Lithium? It just, I have no.
Well, we don't have to buy it out because you need the team, but you paid, I think that they paid 90 for 20%. The multiple was huge. The shareholders must be ecstatic, but I don't understand how, when you've got a pilot about to be built or whatever, it's drilled, the size of the resource, the team, they didn't do that. Maybe they couldn't come to an agreement on price, but I find that given where that valuation is now and what they paid, I find it odd, but there it is.
A couple of other things. I remember back in 2018, 2019, things just were falling, and we were trying to make sense of it, and we weren't, we were right medium term, but not, on a month to month and quarter to quarter basis. But and I was frustrated in 2018, 2019, like everyone was investing in Bitcoin, and cannabis. Like people shifted their attention away from lithium after like this positive, 2015, 2016, 2017 period. What I'm seeing now is uranium everywhere, right? Like the uranium price is up a lot, and also oil prices up a lot. And you're seeing a lot of, talk about both of those. So is uranium and oil, the new cannabis, and Bitcoin of the Lithium 2.0 period. I've mentioned a couple of times, I'm very happy holder of URA, the ETF for uranium. It's finally performed after holding it for a couple of years. I'm a big believer in nuclear. I don't know the individual stocks, but, so happy there. Not at all in oil, but that's like.
But that, Howard, fund is good for EVs.
It is. So there's all sorts of cross currents there, on these narratives. But I watched the second Republican, debate, that didn't have Trump in it, and then I've been reading some research, and EVs came up a lot, and the Biden agenda came up a lot, and I think John Miller from Cowen commented that the takeaway was. They were competing, who could be the most against EVs, among the Republican candidates. And you have the UAW strike, which is now entering its third week. And it's and Biden was in Michigan, and so was Trump. Trump, I think, was meeting with non-unionized workers. But the candidate with the least votes, had the most, I forget his name, the North Dakota governor, had the most detailed kind of criticism, about EVs. North Dakota, I think, is an oil state. He's not going to be a fan of EVs, but he was basically saying, rightly, the reason for the strike is because they're, to your point, they're forcing through regulation, the companies to make vehicles that are currently not profitable. And the UAW realizes they may lose jobs to EVs, and while they're making good profits now, they want profits to go in their pockets, not into investments in currently loss-making vehicles. So this isn't going to go away. This political noise overhanging in the U.S. EVs versus drill baby drill. And even Vivek Ramaswamy was talking about coal and drilling, and the Republicans are not pro EV, and right now it's a coin flip. the Biden has, with Hunter Biden, there's lots of problems on the Democrat side. Big money Biden has been a huge catalyst for the narrative here, and it's somewhat worrying, where it goes, because the implementation guidelines. We had John Miller on to talk about the Inflation Reduction Act, and he said he had hoped by Q1, the implementation guidelines would be there. And here we are in Q3, and the implementation guidelines are still not there. So Ford is pausing their Michigan plant with CATL, which was supposed to be a technology transfer. The UAW is saying, oh, it's a negotiating tactic, and CATL says, no, we're still building it. But it's not clear, one, if that could be built, and two, if it is built, will it get the subsidy? Because the implementation guidelines as to what qualifies for the consumer subsidy, depending on the content, those implementation guidelines haven't yet been agreed, and we're now into a political season where they may just continue arguing and not come up with a solution, and then there's just uncertainty. So bottom line is, I'm frustrated watching, the U.S. political dynamic, unfold, looking through the narrow prism, of EV support. It's still there, but I think it was the UK, postponed, what was it, 2030 commitments for EVs?
Yeah, they pushed it from 2030 to 2035, in line with Europe, though.
Okay, might you see that happen in California and some other places in America? I don't know. So you could have a slowing on demand side, but I don't want to be overly negative here. And actually, maybe, the lithium ion bull, sounding negative is a contrarian indicator, that maybe we're at some sort of bottom. But these are real, and people on Twitter are suggesting that we can't be bullish all the time, and we're not bullish all the time. But there are some real, and going around New York last week, there are those, it's bearish. New York is, fund managers, number of people on the sell side, they just, in the absence of clarity, and there's a lot of fog, they're looking at the price going down every day. And, there are other worries out there that a little bit of, you tweak a little bit on the demand side, right, to the negative, and you're not having any stoppage of incumbent producers who are continue to expand. And we just had Dale Henderson, we tried to pin him down on kind of some short-term, forecasts, which he refused to do. But, the inbound interest with all the clients that we're speaking to from OEMs is very strong. On the other hand, there's not that many deals that are being signed in big dollar numbers. Critical Elements has been waiting for a long time. Albamarle, yes, has made a move on Liontown. We'll see what happens there. But you're not seeing aggressive deal making as we would have thought. You have the Rios saying things are expensive. They're just going to invest in exploration. But Pilbara's business development team, Dale did, John Stanning, I think, is an ex-Macquarie banker that is building a team at Pilbara. We've learned, that team has a number of people. They seem to have interest in Canada. They seem to have interest, in early stage rather than late stage. But actually, someone gave me an analysis, which was from a Pilbara perspective, which I thought was very prescient, is that Pilbara just upgraded its resource by 35%, like another 100 million tons. And to do that, they invested about $14 million in exploration of their own project. So $14 million, that's 14 cents, per ton. If they were to buy Liontown, they'd be spending, I don't know, north of $2,000 a ton, right? So from that kind of calculus to Pilbara, do you go into early stage exploration, or do you, acquire an advanced development asset? The argument there is to, focus on early stage. And James Bay keeps coming back, as everybody we talk to just really wants to focus in that region. Hat tip to to Winsome Resources again. I was with them last week and went to the Peter Gabriel concert. And I commented, I'm on my way. We're making it, big time, Chris Evans and Winsome Resources. But the Adina Discovery has been nominated, forget for what, but they tweeted about it, as Discovery of the Year. So good luck to Winsome, in winning that. Rodney, what do you think just from, again, the Pierre Lassonde curve and looking at lithium with all these kind of like uncertainties that we're articulating here in the short term, where, I'm seeing, if we look again at the scoreboard, I mentioned the producers are all down 20 to 40%. But if you look at the scoreboard, there's a number who are very substantially in the green year to date, and many of them are new stories and new discoveries. So a lot of, I think Cowen was saying that actually even among the producers, lithium price was down, 60, 70%, but lithium equities were only down 8 or 9%. So there wasn't very significantly impacted yet. Somewhat resilient. The market is not fully correlated.
I've got a stat for you, Howard. Livent listed in 2018, I think at $17, and now it's still at $17.
Yeah,
and where
exactly.
was lithium prices there and the growth prospect? To my mind, if you want to look for value in the market, I think we've said this before. I think Albamarle at these prices, people are talking about weaker lithium, but if you're still high single figure PE at a down dip in prices, that's cheap. When there's a recovery and they've got an expansion in volumes, and there's also price upside potential, and then at the end of a drill bit, the ones that you're saying have shot the lights, Azure, Winsome, these guys, these are all hard rock successes. In Australia, every single JORC resource is in play. Everything's coming under so it seems, at the moment, tier one jurisdictions are where the focus is at. And I agree with the concept of early stage, because if you hit a winner and you can grow to a 50, 100 million ton, then you're off to the races. But there's also, to contradict myself on the Pierre Lassonde curve, is if you look at Frontier, if you look at Global Lithium, if you look at the others, I think Global Lithium is going to get to 50 million tons at Manor, and then you've still got Marble Bar, and Frontier is growing. The market cap relative to resource tons is versus what analysts were saying not a long time ago, like every ton is worth $10 million. In that case, then those things are grossly undervalued. We'll see, if, you can argue logistics and, where you take it from here, but, Global Lithium is about to have a definitive feasibility, in which case the tightening of what the costing will be is there, with their new ore sorting improvements. And then Frontier is also, they've reached.
The incumbents like Livent and Albamarle have been derated to single-digit multiples. Is that long-term sustainable, or will they get their premiums back, especially chemical premiums? Who knows? But they have low-cost assets, and they've been pretty disciplined in managing their capital. And, Livent, Allchem, I think Livent is one of David Deckelbaum at Cowen's, top recommendations. I think another takeaway is that, like, things like Global Lithium, in Western Australia, given all the M&A activity that's been happening, and as you rightly say, the focus on, tier one jurisdictions for M&A, a company like that is in that kind of like middle period in the Pierre Lassonde curve, should necessarily attract, attention. We haven't seen too much M&A in Canada, and I think that area should also be ripe for consolidation. And I think that Livent, Paul Graves, and his team is well positioned once the merger is done. That'll be a 2024, 2025 story. I think you're going to start to see more consolidation in Canada, in Quebec. And you talk about, Frontier could be a takeover candidate. Critical Elements. These are advanced projects that could provide beachheads to some of the bigger players that are well cashed up, maybe out of Western Australia. To be seen. I think let's leave it at that unless there's anything I missed, Rodney.
No, we're good.
No. Okay. Very good. All right. Again, please do watch the Pilbara Dale Henderson video, as well as the Jonathan Buick Champion Electric Metals. And be sure to tune in for our Twitter Spaces with the Limiting Factors Jordan Gisegi on Thursday. Have a great week.